C&S Wholesale Grocers nears a deal to acquire about 350 Winn-Dixie stores from Aldi. Farmers Co-op Oil Company shares its growth plans, and Albertsons plans to lay off nearly 400 Safeway corporate employees. Welcome to Retail Daily, your quick look at the top news from Supermarket News and CSP Daily News. I'm CSP Senior Editor Hannah Hammond.
And I'm Supermarket News Editor Tim Inkelbarger. C&S Wholesale Grocers and members of Winn-Dixie's management team are working to acquire about 350 Winn-Dixie grocery and liquor stores from Aldi, according to a Reuters report on Friday. Sources close to the matter said Aldi has been working with investment bankers for weeks to divest some of the nearly 400 Winn-Dixie locations it acquired from Southeastern Grocers in 2023. The C&S Wholesale Grocers Group will acquire 170 Winn-Dixie grocery stores and another 170 Winn-Dixie liquor stores, according to Reuters.
The positive earnings streak continues for Costco as the warehouse retailer announced its January performance. The company reported U.S. net sales of $19.51 billion for January, reflecting a year-over-year increase of 9.2%. U.S. comparable sales, excluding impacts from changes in gasoline prices and foreign exchange, also grew by 9.2%.
New season market continues to deal with labor issues, but one has been resolved. Union workers in the Portland, Oregon area ended a week-long strike Thursday involving what they believe was the improper termination of a worker. Employees began protesting after New Seasons labor union treasurer and 19-year New Seasons market veteran Randy Foster was dismissed at the Arbor Lodge, Oregon store for allegedly wrongfully working while on his break. The union said Foster was helping a visually impaired colleague.
Farmers Co-op Oil Company of Renville, Minnesota, which in January purchased 10 Fill Me Up convenience stores in the western part of the state from Fill Me Up LLC, is looking to grow. The energy cooperative and fuel and convenience retailer has since fielded more inquiries from chains looking to sell, an opportunity that fits well with the cooperative's plans. Its board wants to expand in more small communities.
Albertsons plans to cut spending by $1.5 billion over the next 3 years, and those cuts have begun to roll out in the form of nearly 400 layoffs of Safeway corporate employees and more than 100 associates at a Safeway store in San Francisco. Albertsons, the Idaho-based parent company of Safeway, plans to cut 225 positions in Phoenix and 156 across 2 locations in Pleasanton, California. Those layoffs are set to take place on February 22nd.
Murphy USA President and CEO Andrew Clyde predicts elevated inflation in 2025. Overall, 2024 was a disappointing year, Clyde said in the company's fourth quarter 2024 earnings call. This was due to several reasons, including a slow start to the year as rising prices and severe weather hindered transactions and continued pressure of food inflation in conjunction with QSR value wars, which pressured quick check markets.
Growth in rewards, private label products, and consumer interest in health helped drive a strong first quarter for natural grocers. The specialty retailer said comparable store sales rose nearly 9% during the period, or more than 15% on a 2-year basis. Natural Grocers operates 167 stores in 21 states and said it intends to open 4 to 6 new locations this year.
Circle K and DK are among the nearly 2,000 convenience store locations into which Jones Soda is expanding. The company said this is its first significant presence in C-stores in its nearly 30-year history. Initial C-store placements include 6 Circle K divisions, DKC stores, and other national and regional chains.
While much of the media focus on Amazon's Q4 results centered on the online retail giant's plan to invest $100 billion on AI in 2025, it was the net revenues of $187.8 billion, which positions the company to surpass our rival Walmart, that caught the attention of analysts focused on its retail business. Amazon reported earnings of $1.86 per share on that net revenue for the quarter ended in December, beating the consensus earnings estimate of $1.52 per share on $187.72 billion.
Smoke-free products accounted for 40% of total net revenues, tobacco company Philip Morris International said in reporting its fourth quarter earnings on Thursday. Fourth quarter 2024 net sales for the tobacco company was $9.71 billion. For the quarter, the company's oral products increased by 25%. The company said this was fueled by Zyn nicotine pouch growth in the U.S. And that will do it for today's episode of Retail Daily. Subscribe on Apple Podcasts, Spotify, and more for your daily dose of retail news. For more on these stories, visit CSP Daily News and supermarketnews.com. I'm Hannah Hammond.
And I'm Tim Inkelbarger. Have a great day.